It's often the case that Excel knowledge is not enough, and we need to use some basic mathematical knowledge and formulas. I've seen on multiple occasions somebody who has completed their economic studies faced with the problem of calculating the price without VAT from the price with VAT of £100, or the VAT of 20%, yet they are surprisingly unable to work it all out. In this lesson, I will present a solution to the problems that an average employee or a candidate for a job faces. Percentages. We calculate a percentage change with the following formula. Equals new value divided by old value minus 1. It can also be entered in the form new value minus old value divided by old value. The result should be the same. Sometimes the percentage change from year to year is calculated from the other side. In this example, the sales in 2019 are 20% lower than in 2020. If you are told this information, you might not think about it for long enough or remember that the difference is 20%, when in fact we calculated a 25% difference. This example and the previous one contain the same data. This is often misleading, and I do not recommend this approach unless you are involved with politics and have to adopt the standards for that industry. To calculate the percentage of a product from the total sales, we need to divide the sales of the product by the total sales. Sales of product A divided by total sales. When we want to increase one value by a percentage, for example, adding VAT by increasing the net price by 20%, use the following formula. Original value times 1 plus percentage change. Similarly, when decreasing by a percentage, use the same formula but change the plus to a minus. Original value times 1 minus percentage change. Sometimes the percentage that we have to reduce is given with a minus, decrease by minus 20%, which in theory is a mistake. Two minuses should make a plus, but unfortunately it is a popular error and should be regarded as a 20% reduction. In this case, we use the same formula as when increasing by a percentage. The minus is already in a percentage value. Old value times 1 plus percentage change. Reduction by a percentage is something completely different than a withdrawal of the percentage that has been added. In this case, we need to calculate the price without VAT from the price including 20% VAT. To add a specific percentage, multiply by 1 plus the percentage. To withdraw this operation, divide by 1 plus the percentage. Dividing is the opposite of multiplying. So the value without VAT equals the value with VAT divided by 1 plus VAT percentage. As you can see, we managed to get the original value of the price without VAT shown in the two examples. Many people ask why reversing the action to increase by a percentage is not a reduction by the same percentage. Let's look at the following example, where the price has been changed twice. The initial price was £100, and it was increased by 10%, taking it up to £110. 10% of 100 is 10, 100 plus 10 is 110. After the first change, the price was reduced by 10%, and eventually amounted to £99. 10% of 110 is 11, 110 minus 11 is 99. As you can see, the price has not returned to its original value. The greater the percentage change, the greater the difference between the final and the initial price. Let's change the percentages to 50%. 100 plus 50% is 150. 150 minus 50% is 75. In the next example, the value of an investment increases by 10% every year, and the idea is to calculate how many years it will take for the initial value to double. In the first of the green boxes, input the percentage increase formula and then drag it across the following cells. We don't have to wait 10 years for this amount to double. The amount will have almost doubled after 7 years, and after the 8th year, the value will be more than double the initial value. This is because the percentage in the second and following years is calculated not from the original amount, but from the increased amount. The same result can be obtained much faster using the formula for compound interest, which is initial amount multiplied by 1 plus interest rate, to the power of the number of periods. In Excel, the caret symbol means power. In the next example, a person needs to pay a deposit of £1,000 on a 4% fixed interest rate and annual capitalisation. They believe that after 200 years, their great-great-grandchildren will be millionaires. After applying the previously shown formula, we can confirm my last statement to be true. An amount of well over £2 million will be in their account after only 200 years. If we decide to calculate the same result by using 200 formulas for the percentage increase, we can see that the increments in the final stage of the deposit are incomparably greater than those from the initial periods. Over the last few years, the value of the deposit increased by about £100,000 each year. The nature of these values in the subsequent periods is typical for exponential functions, those in which the variable, in this case the number of years, is the power. So, should we all rush to the nearest bank to make a deposit like this? If you treat these calculations not as a curiosity but seriously, you also need to take inflation, the bank's risk of bankruptcy, the risk of the deposited currency devaluing, or even changes to the system, nationalizing bank deposits, state bankruptcy, and war, all of those into account. After considering all of these factors, a more reasonable way to invest £1,000 seems to be an investment in your professional qualifications, for example, learning Excel and VBA. Margin. Whatever you do in Excel, sooner or later you will have to calculate percentages. So the first part of this lesson was applicable to everyone. When it comes to the calculations of margins, if you don't expect to come into contact with them, you can skip the rest of this lesson and start the next one. Calculating the margin for many people is a big problem because you cannot think about it as adding a percentage to a given amount. In fact, the margin is not a percentage of the overhead cost, but a percentage of what the profit will be from the final price of the product or service. With a given cost and percentage of the margin, the price is calculated from the following formula. Price equals cost divided by 1 minus margin percentage. The margin must be less than 100% because you cannot sell something and earn 100% or more, as every product or service creates costs. The margin might be negative, meaning the company has sold its goods or services below the price of costs and loses on each transaction. Contrary to what it might seem, this is not a rare phenomenon. In some industries, for example when selling printers to business customers, the norm is to sell them below costs. Their manufacturers cover those losses with high profits from selling servicing and toner and ink. Pricing strategies like this for printers is used to simplify catch customers. To calculate the margin, knowing the cost and the price, we use the following formula. Margin percentage equals price minus cost divided by price. This formula can also be written as margin percentage equals 1 minus cost divided by price. However, if the missing element is the cost, use this formula. It's the same as the one used to lower the amount by a percentage. In other words, lowering the price by the size of the margin whilst not changing the cost. Cost equals price times 1 minus margin. Sales weighted average margin. To calculate the average margin, we cannot use an ordinary average. We have to calculate it using a weighted average, where the weights are sales volumes. We can do it in 3 different ways. In the first formula, each of the percentage margins are multiplied by their corresponding sales. The results are added together, then finally the sum is divided by the sum of the sales. This formula gives us full control over the calculation method, and allows us to understand how a weighted average works. The second formula uses the sum product function, which adds and multiplies the margins and sales. Its result needs to be further divided by the sum of the sales. This function is described in detail in the beginner functions lesson. The third method is the simplest for most people, but it requires the creation of an additional column with the value margin. The values in column K are obtained by multiplying each of the percentage margins by the sales. To calculate the average percentage margin, simply divide the sum of the margin by the sum of the sales. Now I would like to suggest deleting the contents of all the green fields in this lesson and enter the formulas without using my video as a guideline. If you manage to enter all of them, you've mastered this material. If not, you can always start again. It was precisely calculated that adding this page to favorites in your browser increases the chance that you become an Excel expert by 53%. So you better do it now.